Welcome to SIRA MCQ YouTube channel. Today we discuss Advanced Level A-Level Accounting Paper 2025 question number 40. This is related to theory part. Look here, what is the requirement? Complete the following sentences. There are 3 sentences there. Sentences as per the conceptual framework for the financial reporting 2018. Look here, there are some sentences related to conceptual framework. We must complete the using the correct word. Look here, there are no words given. We must add this word. Look here, financial statements are normally prepared on assumption. There are some assumption, no assumption, that is reporting entity is blank. What is this? Financial statements are normally prepared on assumption. The major assumption, you must write assumption that reporting entity. The major assumption is, what is that? The major assumption is the entity of business should be carry out unforeseeable future. There are no limited future. We must start the business and carry out this business in unlimited years. Okay, unforeseeable future. Okay, let's see what is the concept related. This is the word is going concern. This is the assumption is going concern. Going concern. Okay, let's see next one. An expense is the definition of expense. Expense is decrease in blank and increase in blank that result in decreases in equity. You know, based on the expenses, based on reason of expenses, based on expenses, decrease in equity. You know, expenses are related to equity, no? Equity decrease. Decreases in equity other than those relating to distribution to holders of equity claims. This one is the expense is decrease in some word, increase in some word, result in decrease in equity. You know, based on expense, you know, equity should be deducted. Okay, other than relating to distribution to holders of equity claims. You know, look here, you know, assets equal equity plus liability, no? Liability. You know, definitely the 100 electricity, no? Electricity expense. There is a expense, no? This is expense. You know, there is a decrease of equity other than distributing to equity holder. Distributing means other than, this is the not related. What are these? Other than distributing to stakeholder. Distributing means drawings or is the one person sole proprietorship. This is drawings, this is distribution. Other one is, what is it? It's a company paid which one? Paid dividends. Paid dividends. This is the distributing to stakeholder. Other than, we cannot identify this is a expense. These are not expense. This is the expense. Look here, there are 2 ways we can identify the expense. What is this? Expense is decrease in which one? Asset. Decrease in assets. I show you. Look here, expense decrease from equity, no? Equity. Paid electricity, 100 minus cash. Look here, the expense is identified. What is the other short is, the reason is cash decreasing, asset decreasing. Okay, this is answer. Look here, decrease in asset. Okay, decrease in assets. Okay, increase in which one? Liability. The other category, other schedule is increase in liability. I will show you. Liability, I will show you. Look here, this is the paid electricity, no? Payable electricity. Look here, the electricity expense is occurred. The electricity bill is received. Okay, therefore we must identify electricity expense. Electricity expense, no? Expense. Payable, not paid. Therefore liability must be increased. 100 electricity payable. Electricity payable. Electricity payable. The electricity expense was identified. What is the other short? Increase in liability. Therefore there are two schedules. They are identifying the expense, asset decrease or liability increase. Therefore we can identify increase, which amount increases, increase in liability. Okay, let's see the final one. Blank is the enhancing qualitative characteristics. Enhancing qualitative characteristics achieved when independent observers means auditors could reach consensus. Consensus means they agreed commonly agreed that, look here, this is the characteristic, is enhancing qualitative characteristic. Okay, enhancing qualitative characteristic achieved when independent observers, auditors, could reach consensus. They are agreed commonly that financial information are faithfully represented. Faithfully represented means the information of financial statements are best, the auditor says. Okay, what is the qualitative characteristic? There are enhancing characteristics. Enhancing characteristics what are they? C, T, U, V. This is the first word key. The C is comparability. Comparability. T is timeliness. U is understandability. V is verifiability. Verifiability. The auditors verify that. Auditors agree to commonly the faithful representation of a financial statement is verified. This is the auditor's common sense. Okay, auditor says verified. This is the good financial statement is verifiability. Therefore we can identify the verifiability is answer. Enhancing characteristics. Verifiability is an enhancing characteristic, qualitative characteristic achieved when independent observers, auditors could reach consensus agreement that the financial statements, financial information is faithfully represented. Okay, this is the answers. In next video we meet 41. No, look here, in next video we meet question number 41.